let's get going. So today it's all about the benefits of a trading journal, and as I've just posted on Facebook, I bet a lot of you here haven't actually got one, but we'll come on to that in a minute, or don't use one, or started one and got rid of it. It's something I learned to do very early on, and it's been an absolute boon for me, and I still do it to this day. I use a page a day desk diary, and there's all sorts of scribbles in it that only make sense to me, but they've helped me over the years, and it really is a boon. But let's go through the mechanics of the thing as well. So excuse me. That's better. Right, excuse me. Sorry. So usual issues, audio admin issues. If there's any issues with GoToWebinar, which seems to have been a bit slow recently, try restarting it or check your device at your end, and obviously email us at webinars@hotforex.com if there's any questions that I don't cover in the next 40 to 60 minutes or so. So let me just read this out before we get going. Obviously, this material is provided as a general marketing communication for information purposes and does not constitute independent investment research. Nothing in this communication contains or should be considered investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing the indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in FX and CFD product is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk, for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment based on the information provided in this communication. And finally, this communication must not be reproduced or further distributed without our prior written permission. Okay, so we're here to help. Remember, this is me. Most of you know. I think there's any new names in here that we have a quick check. There's a few new names, but my name's Stuart. I've been doing this with my own money for over 20 years now. September 1997, I started in earnest. And 4 key things: keep it probable, keep it simple, look at multiple time frames, but most importantly is to know yourself. And part of that is sort of what we're going to talk about today, because the knowing yourself bit was something that I thought I did know, but I didn't accept, and that was one of the things I'll talk about as we go through on today. So today we're going to look at, oh hello, what's happened there? Number 2 came up before number 1. That's interesting, isn't it? So how to keep a trading journal. It's quite straightforward, but most people don't do it. Simple and honesty is honest is best. Always, because the markets are ruthless. You know, they don't care what we're like. They don't care whether we've got green eyes, blue eyes, we're tall, we're short, we're fat, we're black, we're white, whatever. The market does what the market does. It's completely ruthless, and it just goes up, it goes down, it goes sideways, and it likes to take our money off us. Why trading journals are important, and practice. And obviously keep in touch with me. That's what I'm here for. We're all here to help, because if you're successful, we're successful. It's quite as simple as that, because you spread the word about us. So before I get going, let's go back. Actually, get rid of that slide. Before I get going, quick heads up: who actually keeps a trading journal at all? Ever written anything down on a piece of paper or on a spreadsheet or whatever? Who actually keeps a trading journal of the people that are here today? Ever know? Okay, Justin, that's good. Notes. Not as a journal. I do. All right, okay. I even wrote a program. Me, very good. I'll be interested to have a look at that, see what it's like. I used to. That's interesting. Why did you stop? Would be the question. Brian Rotundo, why did you stop? I'll wait for his answer and I'll carry on. So, there's quite a few actually. I was quite surprised. So, well done. Congratulations. But do you do it religiously? Do you do it every single trade? Do you know why you're doing it? That's the key thing. That's what I want to go through today. So this is for me. This is on my own personal opinion. I think it's a discipline issue. Okay, Brian. Yeah, I'm going to come on to that in a minute. You're absolutely right. So Brian wrote, Rotundend wrote that he used to, or she used to, so I'm assuming it's a he, Brian, sorry. And he says, I think it's a discipline issue. So again, it's these words come up all the time. Whatever the webinar I'm doing or talking about or seminar I'm doing, these words come up all the time. It's always, it's always about risk. It's always about personality. It's always about discipline, patience. All these very simple personality traits are the things that make successful traders, not necessarily method. Too many people get hung up on finding the method or getting the right entry, or should I have got in there, or where do I get out, stop loss, take profit. That's important, but by far the most important thing is you as a person, and these things of personality traits. So a journal, for me, 3 key points. It's a simple log, so you can write it down. A simple spreadsheet. You've seen the spreadsheets I keep just on the train, but my journal's very different to that. It becomes a reference manual. I've called it here your personal Wikipedia, and by that I mean, for me, this is my experience, is that it's some stuff I still look back on now. I go back to think, I remember, October 1999 when this happened, or March 2000 and 21st of March 2000. It's a date that sticks in my head simply because I remember that big losses were happening. The markets, the tech bubble was coming to an end, and when you write all this stuff down, it sort of cements it much more permanently, both in your conscious, but more importantly in your subconscious as well, because it's your subconscious, that little voice that wakes you up in the middle of the night if you've got a trade open you're not comfortable about, that's nagging away at you. That's the part of the brain that we need to sort of grab control of as traders and try and manage as best we can. So it becomes a guide, a coach, and again, so I've said personal Wikipedia, your own guru. You become your own guru because you understand. It helps you to understand yourself, even if you don't or think you do superficially, by writing stuff down and seeing how you behaved under certain circumstances and why that happened, how you behaved under stress when you had a series of losing trades, or how you behaved after you'd had a series of winning trades. Because I remember looking back some of the early noughties, some of the stuff I was writing down there. There was lots of smiley faces as the market was going up, and lots of the doodles I was doing in my trading journal. And then all of the, then the inks that changed colour sometimes when we started losing, and all those subtle things make up, the trader that you become, or the trader that you are. And it's those things that's absolutely invaluable when you see them written down. That's how you become your own guru, and it does allow you to move forward. It allows you to grow and change as a trader, because the markets, although I say all the time the markets have never changed, they go up, they go down, they go sideways, that's a given. But suddenly if you're not used to taking short trades, or you're not comfortable going short, you've got to adapt to be able to do that. So you've got to adapt and be flexible, be able to accept a loss, be able to cut a trade before it gets to its stop loss. Sometimes, that's what I do more and more these days. That my stop loss sometimes can be a long way away, and sometimes when I see the turn has happened and it's just not happening, I get out before the stop loss is hit. So flexibility, adaptability, like your own personal guru. That's 3 key things for me. And no matter how good we are, I've been doing this a long time now, and I think I'm fairly good at this, and I'm fairly comfortable and confident about doing this. You're always going to be wrong, and it's that thing that I talk about all the time. You've got to accept being wrong, and if you can't accept being wrong, and being wrong a lot of the time, that's when you trip up. That's when you never get off first base. And so by writing it down, it helps you deal with that as well, because nobody likes being wrong. Nobody likes losing money. And that was one of the very first hard lessons that I learned, because my natural personality, unfortunately, I'm a bit of a know-it-all, and I'm a bit of a big head. I don't like to admit that, but I can admit that now. 20 years ago, or 30 years ago when I started, I couldn't admit that to myself. And so my problem was I wanted to be right all the time. Not so much that I wanted to win. Obviously winning's good and not losing money's good, but it was the fact I was right. That was the thing that really, I couldn't cope with being wrong. And once that penny dropped for me, and again that was helped by writing trades down, I moved on to the next level. I broke through, I broke out the shackles of things. What was I doing wrong? Well, I wasn't doing anything wrong. It was more the time frames I was trading, the data I had, and it was my personality. And that helped me move forward, and it helped with my discipline, it helped with my patience. And as I say here, that third line there, you write everything down, and no matter how small or insignificant it might seem at the time, it becomes quite significant at the end of the day, or at the end of the weekend, or at the end of the month when you're evaluating and analysing everything. Excuse me. And it's so much more, because a lot of people say, oh well, I get like down here, I've got my details on my MT4 terminal, or I get logs at the end of the month. The broker emails me every time I do a trade. He emails me at the end of the month to see what my account's like. That's fine because it's all written down. Well, that's great, but doing it yourself, writing it down yourself here, like I've written here, it is so much more significant and so much more fundamental for you to move forward. So do write it all down. He's a little great example of why this is a trade from last year. This it's not current, it's not relevant, but sorry, it's relevant, but it's not current. So what we're doing, so target one. So here, what's doing? So this was a trade. This was April, May 2016. This is 26th of May. The trade was opened. It was a buy on copper. We got in at one here at 21130. This is our entry here. Target 1 was up here, this target zone here, and target 2 was up here. So why did that trigger? What did I write down here? So I had a risk reward on this of 0.7. It was less than 1. The floor was down here, I thought, at 0.203 as we come down here this day. So it hadn't broken below there. That support looked fairly strong there. The dollar was weakening. Commodity currencies were generally weakening. Aussie was this is what I've written down here in my journal for this trade. Aussie and China issues seem to be increasing. Question mark, question mark. We broke down through the Bollinger Band. We've gone sideways here at this floor. So this floor was looking quite good at 2.03 here, 7, and we were back to the Bollinger Band when we were looking for the energy. These 1, 2, 3 candles there. We're looking to break over that Bollinger Band there. But so we were having a problem getting above this entry point, and regardless of the outcome at that time, that's what's written on the left hand side of the journal. This trade actually failed because it didn't break the 20 period, and that's what I've wrote down on the other side. It didn't break the 20 period, and it shriveled off and actually retested this floor in the end. But what I've written down has helped me learn from that. It's another one, and it's cemented the idea of the break of the 20 period moving average is quite important. The Bollinger Bands were pointing down. These are the negative things that looked at that I've written down since. The Bollinger Bands were pointing down. The moving average has obviously proved quite strong, and this move continued to the downside. So I could pick out lots and lots of trades, and they've all written down, all down there in the trading journal itself. It's a record keeper, daily routine, discipline, patience, and that's what Brian's commented on there about. It's a discipline issue. So he probably got, like all of us do, and I did when I started, thought, oh, it doesn't matter anymore. And there's weeks where you can see I've written an entry, but not an exit. What happened at the end? How did you feel at the end? It's this idea of this coach and this mentor, but the thing is, and at the time of taking the trades, you've got to be honest with what you're writing down. So how do you feel? It's everything else that goes around it. So you've got to be disciplined and keep doing it, because it does build up to be the very, very useful encyclopedia for you, and it can be a great predictor of your overall trading performance. So again, obviously I've got years of these books now, all these journals going back, and you can see the times when I've been going through a difficult time or a losing period, the number of entries in the journal seems to taper off. And again, that's human instinct. We tend to write the good stuff down and forget about the bad stuff. And again, that's just how our brain works to protect us. But if you can discipline yourself to write absolutely everything down, and you'll be amazed at what the odd things that you've written become quite significant when you look back at it. So why everything you feel when you take the trade sometimes can be really important. So if you're really tired, or you've had an alcoholic drink, or you've had too much coffee, or the kids are doing your head in, or whatever it is, or the dog's barking his head off, or the neighbours are rowing next door, all those sort of little notes impact how you behave. So we want to be as automated as we can, but we're human beings, and we're built on emotions, and we've got to try and control our emotions as much as possible, especially as traders. So the other thing, that last point there, is during the day or during the week, there's key news events. So sometimes it can focus. You become attuned to the really important news events. Sometimes become experts in the trading, the idea of a trading journal. They still write everything down. They still either type it up or physically write it down themselves. So again, it helps you to grow as a trader. Again, this is another one from June when we had lots and lots of notes here. This is an NFP day when we were expecting 160,000 and it came in at minus 38. So we had this massive sell-off of the dollar. The euro shot up here. This is sorry, it's pound, isn't it? Sorry, that's euro. It is euro. Shot up. So if you then this is on the hour chart. If you then scroll back through this as a somebody says the sound gone. Is the sound back? Am I back? Hello? Can you hear me? And comes back. Goes away and comes back. Now it's back. Alright, okay, let's just make sure this is... Let's double check. We got audio. Audio looks okay. Microphone's okay. Okay, right, I'll just give a note to that. Right, so what I was saying, I don't know where you lost me, but basically this is another example. NFP, it's a big impact in the hours chart. There's a big miss in this particular number. It came at minus, and it was expected to be 160. So here on the 1 hour chart, big move against the dollar. But again, up on the daily time frame, or if you hadn't written it down, the significance of it may have been lost on you. Lost on the higher time frames. Okay, so hopefully the sound is okay. I hope. Let's hope it keeps going. So the whole point of trading, and I come back to this time and time again, and even here when we're talking about writing a trading journal, it's all about risk management. Too much risk and you end up emptying your account. Short life as a trader. By analysing your trades, you can start to see the patterns that work for you and your trading and your personal behaviour. So you'll see patterns forming. So you'll see, you would think, half your trade should be long, half your trade should be short. That quite often will not be the case. You'd think you'd get as many opportunities on the euro dollar as you do on the dollar yen. That might not be the case. And until you write that down and analyse your charts and your trading, you don't start to see that. So by understanding your psychological behaviour and your behaviour or preference to perhaps going short or going long, it helps you. A disciplined trader is a profitable trader, and keeping journal is the first step to build that discipline, because it's all, like I said, it's all about discipline and patience. And it also helps you to tweak and adapt your approach. It's only after, as I say all the time in the mind games, it's only after you've really done 100 trades, I would say, with real money, do you have any idea of what sort of trader you are. Okay, now whether that's trading on 5-minute candles or 1-minute candles as a scalper on a $500 account, or you got 5 million in your account and you're only trading every couple of days, you don't know what you're like as a trader until you've completed all those trades, and what your discipline's like, what your patience is like. But again, writing stuff down is such a great crutch and helps you, because you can't, well, you can kid yourself. That's why I said about being honest, and you can write the odd things down. But again, when you look back as a real lesson, you'll see. And again, I've done that. As I say, I missed out writing the poor trades down. Again, it's just human instinct. But all of them down. Treat them both the same. So many people ask me about what is a trading journal? What should it look like? Mine is very simple. It's a page. As I say, at the moment, it's a page a day diary. I draw a line down the middle of the page on the day, and on the left hand side I'll write the trades, why I've taken them, or how I felt at the time of taking the trades, and then on the right hand side I'll write the outcome of that trade and how I felt at the outcome. So it's not just about feeling good or making money or feeling bad and losing money. It's all about all those other things I've talked about. About, you know, I was tired. I didn't actually get in. Those of you who know, listen and watch me on Facebook, you know that I tend to trade at the end of the day. So here, you know, that's 10 o'clock London time normally. So it means sometimes staying up till midnight here if I want to trade it at the time, or getting in early before the day's close. So sometimes you get caught up by not waiting till the day's close, or I tend to wait until the following morning here, get up early here. It's middle of the night in London times, but there doesn't seem to be that much movement overnight for the particular currencies or the particular assets I'm trading. So I'm happy to take entries during the night to the early sort of morning candles. But it's all written down, and again you see, you know, some of those late night trades, especially later in the week on a Thursday or a Friday night. You know, if that's when some of the mistakes are made. So it helps you to form what's the best time for you to do it. And for me, I tend to do better by taking the trades early in the morning rather than, although they might have triggered it in the evening, I get in a few pips later, or sometimes it's better price. But it's clearer for me first thing in the morning. So again, but that I only got there simply by writing everything down. Those of you that, you know, Baby Pips, www.babypips.com is a great learning asset. There's lots and lots of great stuff on there, and they've got a little section on writing a trading journal. And here I've just pulled this directly from them. They have 5 must-have elements of a Forex trading journal. They've got you know, these are the key things: a potential trading area, when to get in, an entry trigger, position size, trade management, and analyze. Trade retrospective is what that means. For me, as I've written down here, I'm not criticizing Baby Pips at all, because it's a great teaching facility, and I'm fully, highly, very, very, not, I can't recommend it, but it's a really good site, certainly for people that are certainly starting off in Forex, or any trade, not just Forex. But for me, this is sort of overcomplicating it too much. We're all different. Write down what's important for you. You know, who you are, the one who will benefit from it most. So these are great. Nothing wrong with the practicals, numbers of position size. You know, price it got in, price I got out, price I want to get it to. You know, stop loss, take profit, all that sort of stuff. But it's the other stuff. This the management of the rules. You know, are you going to be? Are you a guy that wants to have a trailing stop loss? Are you a guy that wants to sort of move into a position then move out of position, so build up your lot size as the trend goes with you? All those sort of things. That's just why you decide how you want to trade that. For me, it's very simple. I tend to, you know, if I've got 2 targets, I'll tend to open two trades, one with 80% of the risk at target 1 and 20% of the risk at target 2. If it's only got 1 target, obviously all the risk is on target 1 at the time. That's a typical sort of my sort of approach to trading. So make it work for you. Write it down. Make it work for you. So so these are some of the examples. Yeah. This is how I've started. This was February 1999. So so I started September 1997, and I wasn't really writing much down at all. And even here, this is just the earliest example I can find. I've still got this is a Financial Times pocket diary, and this is back in February 1999. And these were stocks I'd bought. So this was CTM, Vodafone, Vocalis, Fiberonics, I think, or I can't remember. It was Oracle, EGS. I think that was TWT, I can't remember who that was. RGS, RGE, Williams, I think it's Dell, CTX. So this is, here we go, 26th of September. This is as far as my trading journal went in February 1999. Vodafone, I've still got a lot of those shares. Most of these companies were tech companies that have either gone bust or been bought out. Telecoms companies, some of these were, but most of these were winners in 1999. And actually, was this? I can't remember about this, but if you can see this, you know, Colt Telecom was I bought it at 11.60, and it looks like it went to 23, or it's up 23% or something. Vocalis was 87, and it looks like it was 80. See how basic it was. Fibs had gone down, or perhaps that was a change, 17.2. I can't actually see. I haven't actually got here. I just took this photograph of this when I put this first thing together, but it worked for me at the time, and it's not perfect, far from perfect, but it got me going. You know, this was another one I did with a little bit later. This was back in 2002, and I don't know if you can read this. The photocop's not great. So this was when I was trading the FTSE and some key indexes and some key stocks. So here, let me just, I don't know if, can you see, can anybody see that? It's quite clear on my screen, but I'm not sure you'll be able to see that remotely. Let me just run through. So this is the date, this is a week, so it's the 3rd of May 2002. So the date, this is Monday, Tuesday, Wednesday, Thursday, Friday. This is the FTSE, whether it had gone up or down at that day. So it'd gone, so number of days up or down. So it was the 3rd day down. It finished down -5. The futures price was this. The FTSE, so was the FTSE future above the FTSE cash? That's how I was trading at that point. What the yield was, the volumes, the Bollinger Bands. That's when I really started using Bollinger Bands in earnest. So it was the upper band, lower band, and the percentage in the band is how I was using it then. That was quite a useful way, and where we were. So percentage close, where the stop and reverse was, where the target was. How much of the market here, I called it a barometer here, how much of the FTSE 100 were long or short. So that day, on the Monday, 49 were long, and there has sort of remained that all week, so it was a very flat week. Then I was looking at the Tech 100, it was another chart, the Dow Jones, Bollinger Bands on the Dow, the Nasdaq, and then there was 5 key stocks, 5 or 6 key stocks I traded. There was Reuters, BT, Standard Chartered was the bank, Logica was a big IT company, Glaxo, a big pharmaceutical company, Dixon's, which is a retailer back in the day, and another bank, HSBC, and I did exactly the same things for those. So whether it was up or down, where the stop and reverse was, where the target was, and percentage of the Bollinger Band. So this I filled in religiously from 2002 for quite a few years when I was trading stocks quite aggressively in just these 3 key, or these 5 or 6 key assets. So there was 5 stocks, 3 indexes, and it was before I really got into Forex, or long before I got into Forex trading. So it was another one of my documents or trading journals that I've got. It's in each of the diaries I've got, and here they all are. And they're literally, a lot of them are diaries. They're not all diaries, but 6, 7, I think there's 8. I don't know what that one is. That's this one down here. That's the original one. That's that 1999 one. Today I've got one here. It's next to me. It's a 2017 A4 page a day diary 2017, and it's nearly finished, isn't it? It's where are we? It's November the 15th. There was last night's trade scribbled in it. New moon on Saturday, and there you go. It's all sorts of nuances in there, and it just keeps it up. And I've got them all. I keep them all, and it's it might sound a bit odd, but that's how they work for me. So let's just run through this again before we wrap up today. It's a log of all your activity. It's not to monitor. It's to see your performance and your system and your ability to execute the system, because that's the other thing. If you write it all down, you see how good you are. So if you're writing it down, you've got automated systems. Somebody wrote at the beginning that they use Evernote as their journal. That's fine. But as long as it helps you. It's not systems that make a poor trader. It's usually the inability of the trader to execute something, okay, or execute their trading plan. And the plan and the journal is to help you make sure you do that. And it's all about self-analysis. Don't get too overexcited when you're winning. Don't get too depressed when you're losing. It's all the same. I've been trading many years now, and all those losing trades I had on the Aussie dollar on Tuesday night, Monday night, Tuesday, rankle me. Still, 700 pips in one day is far too many pips to be losing. But we'll get it back. The end of the month it should be okay again, but we'll see. But it was coming because we hadn't had a run of losing trades, and that's what's happened. They're only as good as what's written on. No one fails to accurately track trades. It's got to become judgment. Keep changing them. Ongoing effort. Keep going through it. Be thorough and honest. This is probably the point I would like to leave with you. Thorough and honest. Don't kid yourself. because the markets don't kid yourself. Just because you think, oh, if I'd left it, we would have got to that target, or we wouldn't have got to that target. You've got to be absolutely honest with yourself. Always do it before you trade. Write everything down and all your feelings. How do you feel about it? What do you feel about what it happened? A tip I quite often say to people is, if you're not sure about a trade, either don't take it, wait for the next opportunity to come along. Or one thing that helped me was actually looking at a chart. You got your candles or your line chart or whatever it is. Try turning the chart upside down. See if you would take the opposite trade. That sometimes helps ferment your thought process. And as I say in here, nothing is too pointless to write down. What happened? Why it happened? How do you? How did you feel? The dog was barking. The girlfriend called. You spilt your coffee over your keyboard, and you suddenly lost the link. The screen froze. It got suddenly very volatile. The broker, the spreads went crazy. Yes, Maria. Sorry, I haven't touched on the basics, but yes, right. I'm assuming that Maria's just asking, what do we actually write down about each trade? The entry price, the lot, the risk. Yes, absolutely, Maria. That's the basics. What I've talked more about today is the other stuff, the soft stuff, the psychological stuff, because it's the psychological stuff that lots of people ignore or don't realise that's the important thing. Feelings, absolutely, Maria. Yes, how you felt. That's what I've wrote here. So how do you feel about that trade? Were you comfortable with it? Were you like a 60% sure that you were comfortable with it? Was it a 90% sure? Because again, that will create a log for you to look back on. And you'll see, well, I'm overconfident when I go long on the pound. Every time I take a pound trade, I always feel it's really good. Or every time I go short on gold, I'm always fairly confident at it. And then the outcome of the trade will help you sort of start to think, well, actually, look at that. And you will start to see patterns. You'll start to see patterns of behaviour as well as patterns of winning and losing. And certain, you'll start to see, well, actually, look at that. Over the last 100 trades I've done, every time I took a pound CAD trade, I lost. Whether I was going long or I was going short, it didn't matter. I lost it all. That's an unusual example, but that would be a great example. The downside of that sometimes is that the next time a pound CAD opportunity comes up, your subconscious knows that you've lost the last 5 pound CAD trades, so that might prevent you from pressing the button. If it does, again, that's where the journal comes in. That's where writing everything down comes in. Because if this one actually won, it shows that your system, actually does work. It was just the last 5 didn't work, but the 6th one did, and I've written it down. And now okay. So I didn't benefit from the money, but I've benefited from the opportunity and the knowledge to know that that did actually work. So again, I know it sounds boring and it's old-fashioned writing stuff down, but it works for me and it works for many traders I know. And obviously lots of these now are automated. I won't go through all of this, but this is the sort of thing, Maria. So I kept this for the end. These are some of the stuff you want to put in. Profit, win percentage, loss percentage, biggest trade, biggest losing trade. Again, lots of brokers, with different accounts will offer you this sometimes. If you can trade a PAM account, PAM accounts give you all this sort of stuff. If you're looking at those, longest number of consecutive losers, average number of consecutive. All might sound a bit boring and tedious, and it doesn't fit for you. So you decide what works for you. Do keep a trade. You will not regret this. That's the point I put down here. Biggest account, percentage drawdown, feelings and mistakes, all this sort of stuff. But pick the ones that work for you. The obvious ones are, entry price, target price, stop loss, take profit, percentage risk, risk reward, those sort of things. That's all fairly standard stuff. And you should have those down as a minimum. But the rest of the stuff is the soft stuff, and that's the stuff you want to start thinking about. And you only get to do that once you've had some real experience of trading. But again, you can do this. You're happy to do this on a demo account, but obviously the beauty of doing it with real money is that obviously the emotional side of things, which makes much more sense. Okay, Tusha's just asking, my trade life, I have lost. I won't read out how much you've just put down there, and still missed the hit take profit for a little and market all reversal up to my stop loss, and I still do not understand where I went wrong. Tusha, I will contact you after the webinar, okay? And we can talk offline about that, okay? Because what you've written here, it's that psychology thing. It's that. Have you watched my Mind Games webinar, where I talk in much more detail about this sort of stuff? the mind games webinar. Tushar is the one you want to have a look at. But I'll call you after the webinar if that's okay. I'll find your account and we can chat offline if that's okay. So as I say, Baby Pips is a great site. They have their trading journal here. So if you go to www.meetpips.com, that gives you some sort of basis of a trading journal, some sort of things you might want to put in. But again, don't overcomplicate it. You know, some of these things here might be too much for you. You know, profit and loss, how long have you been, average holding time, trade. It's all great data to have, but if it's not relevant for you, or it doesn't work for you, don't include it. But do write everything down. Do have a trading journal. There's lots of sorry, I'm going the wrong way. There's lots of web-based trading journals now. If you Google it, I can't remember the names off the top of my head, but there's a few companies that offer them. But obviously they cost. You know, they want to charge you, want to sell you something. You don't really need to do that, in my view, because the first thing is what I said right at the beginning of this webinar, is to know yourself, and that's by far the most important thing. And write it all down. Maria's wrote here, can't we find a record of all the trade stats inside the broker? Yes, absolutely, Maria, of course you can. That's what I said earlier on, that the broker does do that, and that's why lots of people say, well, the broker sends me all the technical stuff. Well, that's fine, and so they should. You know, sometimes brokers make mistakes, so check them as well. Very, very unusual to make mistakes, but sorry, I forgot what I was going to say there. I've completely lost my thread of what I was going to say there. Yes, sorry, Marie. Yeah, but it comes back to the point about what the broker doesn't write down for you is you know, your feelings, your you know, the time of the day. You know, were you clear? Was it cool in the office? All that sort of thing. What was going on? Were you sitting quietly? Was it a good time of the, you know, the day for you? Whether you had a bad day at work? All that sort of soft stuff, as I call it, sits in there. Maria, we obviously we as brokers, we have to send you all that sort of stats, and you see all that stats on your MT4 platform. End of every month, you'll get an email. You get an email every trade that you do. Marx is saying here, meetpips.com just mentioned their closing their website. Oh, have they? I didn't realise. Let me just check that out. Actually, let's see if they've gone. Meetpips.com. Well done, Marcus. You should keep my updates up to. Pips is closing. It's absolutely right. The team will continue to support and develop babypips.com. If you enjoy journaling with Meet Pips, please give babypips okay. So what they're saying, Marcus, presumably, let's just pull this in. So Meet Pips is the one. They're part of Baby Pips. So it's saying here that please give Baby Pips and our trade journal forum a try. So there you go, 300,000 plus traders out there. So do have a look at that. It's still there, Marcus. Basically, it's not saying it's gone, but you might have to. I don't know of another free one off the top of my head, Marcus. But you know, try it with yourself. Try with a blank sheet of paper, whether it's a diary or not, or a hard base book. I say when I started. It was literally that pocket diary, and it was just the trades I'd taken, and that was just more, you know, as you saw, a post-it note in a pocket diary, and this thing here, this thing now, I like that was literally that's a yellow post-it note stuck in on top of that you know, week to display in a pocket diary. Very, very crude, but it was a very, very successful year, 1999. The tech markets went botty. So make something that works for you. You know, this one here was a simple blank Excel spreadsheet, and I manually filled in. I wrote all these in and then typed them. I was, you know, a bit anal about it, and then typed them all in at the end of the weekend, and you could plot graphs from it and all sorts of stuff. So you know, have a trading plan, you know, but write it, but make sure you have your trading journal and you write it all down. So these are some of the things you might want to put in. The technicals, what I say a lot of the brokers do. The key thing is the emotions, the feeling thing. This stuff I point down here. As I say, I can't emphasize this. Nothing is too pointless to write down. What happened and why, and how you felt about it. At the trade, that's really what the story or the news I wanted to get over today. It's very much about you, and it all comes back to this stuff I say at the beginning of lots of webinars. It's all about you. This business in my view, is 20%, sorry, probably less than that, 10-15% method, and the rest of it, 80-90%, is psychology and you know. Things like this, our app help you, obviously. The date's there, the data's there, the news is there, our analysis is there, but it's all about really knowing you, yourself. And you know, if you're new to trading, there's two absolutely priceless books I would suggest you have a look at and read and reread, and I do all the time. One is this one. This is the best book ever written about trading, in my view. The Reminiscences of a Stock Operator by a guy called Edwin Lever. It's a story of Jesse Livermore. It was written 94 years ago now, 1923. It's not out of print, but you can get it if you Google this. It's a free, you can download it as a free PDF, and you can either store it on your device or print it off, and whatever you want to do. And the other one is this one, anything by Mark Douglas. It's all about the psychology of trading. And again, the easy one to read is the one from 2000, Trading in the Zone. And again, that's available as a free PDF. Google Mark Douglas Trading in the Zone, and you can download that. You don't need to buy the book itself. But you know, if you're a serious trader, get the books. I've got lots and lots and lots of books about trading. All of these on here are great insights into trading. Benjamin Graham, Dr. Benjamin Graham, it's the backbone of what Warren Buffett does now. Everybody knows who Warren Buffett is. No, not many people know who Ben Graham was, but he's the economist that Warren Buffett based his investment, his long-term investment ideas on. His ideas of the simple idea of compounding, and time is the most important thing in markets. Jack Schwager's got 3 or 4 or 5. He's written lots of books now. He's got 4 or 5 books in the Market Wizard series, and these are all super traders. People, you know, made billions of dollars, and he interviewed them all and asked them why. And you know, he's updated books. He's done his recent one is on hedge fund. And, you know, the top 1% of traders. So thank you, Justin. Thank you. No problem. So there you go. You know, Elder and Van Tharp are really good teachers for traders, good with equities and in particular. Again, both written very good books, and I think either one of them is actually in one of the Market Wizards in one of his books. I remember. I think it's Van Tharp. Michael Lewis, he was on Bloomberg yesterday. Great author. His latest book was the Undoing Project. I read it early in the year over the summer holidays. Great book about Danny Carman and Avis Terman, two Israeli psychologists, but really affected everything we do, especially or as well as the financial market. Lots of other things as well, education, healthcare, all sorts of things. Fantastic book. Mark, Emka, if you just Google it, you know, just put it into your search engine. I'm saying Google. There are other search engines, aren't there? Obviously. So if you just Google or write in down Mark Douglas Trading in the Zone, you should get options for PDF copies of it. Obviously, go to Amazon and buy it yourself. Get a copy of it, and then you've always got a proper book copy of it. But if you don't want to do that, you can download it as a PDF. Same with this one here, The Reminiscences of a Stock Operator. What was I saying? Yeah, great book, Undoing Project. I say he was on Bloomberg yesterday talking about Nicholas Taleb Nassim Nicholas. It's all about probabilities again. A great trader, a great writer. His most famous book is probably The Black Swan. He's written books since then as well. And Fooled by Randomness was the first one I wrote by him, all about probabilities again. If you're brand new to trading, Forex trading, Anna Cooling with her husband David has written a really good introduction to Forex, and she has a very a theory or approach very similar to mine. And this is a really good book, Forex for Beginners. You can get that as an ebook or off Amazon as a hard copy book as well. And she's a big volumist. She's got her own website as well. She teaches traders as well. She sells lots of different courses as well. But she's very much looks at futures. She trades futures, Forex, and volume is key for Anna and David. That's the part of their approach is very much a volumist, as they call themselves. So thank you for your time today. A bit shorter than yesterday. I still waffle on too much, I no doubt. Any questions about trading, about journals, about anything at all before we go? We've got a couple of minutes left before I wrap up. If not, email me at webinars@hotforex, or follow us all the time at analysis@hotforex.com. That's where all the analysis is written, and obviously lots of stuff now is put up on Facebook as well. I tend to give you a heads up of stuff that's looking like trades for me personally on my account overnight. Obviously intraday stuff gets put up on there as well. Busy day today. Euros had a really strong run. Dollars weakening. All sorts of things going on. Gold's picked up. Yen's picked up. Gold's at 12.85 now. Euro's up at whatever it was last time. I haven't got Euro up here, but yeah, it's had a good day as well. So anyway, no questions. So thank you very much. Thank you for your time. I hope that was useful. If you think of something afterwards, do email me here at webinars@forex.com, and we'll see you on Tuesday for some live analysis again. Okay, take care. Tomorrow is I think Jay's talking about Fibonacci. I haven't actually put up the new webinars, have I? But we'll say Tuesday live webinar, live analysis webinar. So take care, everybody. Thank you very much. Bye bye.